What if I told you there are two tickets to wealth? One is a lottery ticket. It promises instant wealth. The odds of winning? 1 in 300 million. The second ticket isn't really a ticket. It's a habit. A boring automatic transfer from your bank account. It promises absolutely nothing overnight. One is a rocket that will take you to the moon in an instant. The other is a snowball that starts out no bigger than a pebble. Which one do you think will actually get you there? Most people bet on the rocket. They buy the lottery ticket. They chase hot stocks. They pray for a miracle. And that's exactly why most people never build real wealth. The quick profit rocket almost always crashes. I'm Austin, and today I'll show you the mathematical magic that patient investors use to build an avalanche of wealth. Let me introduce you to two people, Leo Lottery and Carolina Capital. Both are good people. They work hard and dream of more. Each of them has a free $30 a week. And that's where their stories diverge. Leo feels trapped. He looks at his bills and his job. He sees no ordinary way out of this routine. For him, saving a couple of dollars will never change anything. So he buys a dream. $30 a week goes to lottery tickets. For Leo, it's not just money, it's buying hope. He's buying the chance to spend the whole week dreaming about what he'll do when he wins. The odds, a staggering 1 in 292 million, are just abstract numbers to him. What feels real is the story of that winner he saw on the news. Now be honest, which one of them are you more like? Now let's look at Carolina. She feels the same financial pressure. She looks at the same $30 a week, but chooses a different path. She sets up automatic investing of those $30. That's $120 a month into a simple, low-cost S&P 500 index fund. No thrill, no weekly daydreaming, no adrenaline. It's boring. So boring that once she sets it up, she almost forgets about it. She doesn't try to time the market or pick the next quote-unquote hot stock. She simply buys a tiny slice of 500 of America's largest companies. Two people, the same starting line, the same amount of money, one chasing a lightning strike, the other planting a tree. The first few years, their path will look deceptively similar. And that's exactly where the trap lies for 99% of people. Let's fast forward 10 years. For Leo, the weekly ritual continues, $30 a week. Over 10 years, he spent $15,600 on lottery tickets. And what does he have? Sure, he won a few times. $4 here, $7 there. Once he even won $100. That win reinforces belief. It gave him an illusion of control. But every draw is an independent event. His odds never changed. Those $100 were quickly spent. In the end, after 10 years and $15,600 spent, his net worth is zero. Now let's check on Carolina. Her $30 a week quietly went into the account. Over 10 years, she invested the same $15,600. Let's assume her account grew at the average S&P 500 return of around 10% per year. After 3 years, her account held about $6,000. That's fine, but not impressive. It doesn't feel like magic. Did you know 80% of new investors quit within the first 3 years? Exactly because of this boredom. And that's where most people make the mistake. They quit. They think the solution is extreme saving. But the real solution is to increase your income so you can invest more. I, as someone with extensive experience in financial markets, on my Telegram channel at FX Austin, share how even with a small amount of capital, you can earn additional income comparable to your salary. That's money you can then direct toward long-term investments and speed up the process many times over. Link in the description. But Carolina didn't quit. She trusted the process. By the 10-year mark, she had contributed $15,600. But thanks to the 10% average return, her investments had grown to around $26,000. Let's pause and absorb that. Leo has nothing. Carolina has $26,000. She created over $10,000 out of thin air simply by being patient. And this is only the beginning. The snowball is just starting to grow. Welcome to year 20. Let's visit Leo first. He's now in his 40s or 50s. Over 20 years, he has spent a total of $31,200. The jackpot dream feels more and more distant. His net result from 2 decades of investing in hope, still zero. A sunk cost of over $30,000. Now let's turn to Carolina. She was consistent too. Her total contributions are now also $31,200. But her account balance is nowhere near that. This is where the path diverged into a chasm. Here's the shocking truth. At this point, Carolina's money is earning more per year than she's putting in herself. The snowball that rolled so slowly in the first decade is gaining serious mass and speed. In the first decade, she earned about $10,000 in growth. But in the second decade, the money her money earned is now generating its own significant income. It's an army of dollar bills working for her day and night. By the 20-year mark, at the same 10% average return, Carolina's boring investment account is now worth about $95,000. Think about that. She put in $31,200. The market did the rest, adding an incredible $64,000. The gap between Leo and Carolina is no longer small. It's life-changing. He's down $30,000 and she's approaching six figures. 30 years have passed. For Leo, it's a story of what was lost. But for Carolina, this is the moment the snowball became a real avalanche. Brace yourself. This is the finale. Over 30 years, Leo spent $46,800 on tickets. And he has nothing. Absolutely nothing. He spent nearly $50,000 chasing a fantasy. His rocket never left the launch pad. Now we check on Carolina for the last time. She also stayed the course. Her total contributions over 30 years, the same $46,800 as Leo. But her balance? Buckle up. In the third decade, something extraordinary happened. The account started growing so fast, it became hard to watch without catching your breath. By year 25, she had over $150,000. By year 27, nearly $200,000. Do you feel what's happening here? This is the decade where compound interest truly takes over. The snowball has turned into a full-on avalanche. After 30 years, the same 10% average return. Carolina's account is worth over $280,000. $280,000 from $30 a week. From the same money Leo burned on lottery tickets. Let that sink in. Leo, minus $46,800. No assets, nothing. Carolina, $280,000 from a $46,800 investment. The market gave her a bonus of over $230,000. This is not a fairy tale. These numbers are based on the S&P 500 historical average. The lottery is not wealth building. It's a tax on impatience. The math doesn't care about luck, timing, or winning streaks. It rewards one thing: consistency over time. And this is the lesson most people never learn because they quit too early. They look at their $6,000 after 3 years and think this is pointless. But that's like planting an oak tree and cutting it down after 3 years because it's not big enough. The tree doesn't care about your impatience. Time doesn't negotiate. Here's the brutal truth about compound interest. In the first decade, it feels like nothing is happening. In the second decade, you start to notice something. In the third decade, it takes over completely. And if you're not in the game by the third decade, you miss the entire show. So what do you do now? First, stop buying lottery tickets. Seriously, stop. Even $10 less on the lottery is $10 more in your future. Second, open a brokerage account today, not tomorrow, today. Third, set up automatic weekly or monthly transfers, even $20, even $10. The amount matters less than you think. The habit matters everything. Fourth, do not touch it. Don't check it every day. Don't panic when markets drop. Market drops are not your enemy. They're a sale on future wealth. Fifth, if you want to get there faster, increase your income, not your risk. On my Telegram channel at FX Austin, I show how to build an additional income stream using financial markets. Not gambling, not get rich quick. Systematic, disciplined trading with clear rules. The kind that lets you fund your long-term investments with active trading income. Link in the description. The difference between Leo and Carolina wasn't intelligence, luck, or starting capital. It was one decision: what to do with $30 a week. You have that decision in front of you right now. Which ticket are you choosing?